Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. The hope is, after a good start yesterday, there is more to come. I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, good morning.
Hi, good morning, folks. A little bit of, sprinkling of rain here and there once again in Mumbai, which is a relief because otherwise it would have gone away way too fast. So, not bad.
Well, that's right. In a couple of sessions more, it'll be the end of earnings season, which has been pretty okay. But it's a long weekend as well. So, let's get straight to the action. We've had a good start to the week.
Long weekend more.
Indeed.
Already.
Indeed.
3 days to go, but I mean, so U.S. equities, just to take it from the top in terms of where we are, no real big indication one way or the other in terms of cues as you start today's session. I mean, at least from the U.S. market. Friday, remember, the market was up 1%. We ended 3% higher week on week in U.S., and there was underperformance here in India, and we kind of sort of participated decently well across the board. But last night, nothing very much. S&P down about 0.25%, the Nasdaq down about 0.3% or so. As I said, neither here nor there, largely. Macro markets are largely quiet as well. The US 10-year yield was down about 1 basis point, nothing actually, 4.2. Dollar index, though, made a move higher to about 98.5. That's about 0.26% up. And oil prices are actually almost flat and unchanged at around $66.5 a barrel. In terms of news flow, again, it is very, very thin. So President Trump has signed an executive order extending U.S.-China trade tariff truce by another 90 days. This was widely advertised, expected, etc., etc. So, basically, it's just happened. There was a press conference which President Trump addressed from the White House and took questions, etc. It was about, of course, Washington, D.C. and what he wants to do there with regards to policing and sort of, getting federal forces as far as Washington, D.C. goes. But, of course, there were questions about tariffs and actually there was one about India, but nothing really new in that sense. On Russia-Ukraine war, and this is the big cue that I sort of highlighted right in the top yesterday morning as well, which is the meeting between President Trump and President Putin, and he confirmed that the meeting is going to take place on Friday. He said that he will talk, President Trump said he'll talk with Ukraine and Europe after he talks with Putin on Friday. So, a lot was said about it, but can you really take away a strong, solid thread from it? This or that? Not really. But the meeting is taking place, so that kind of sort of keeps hopes higher. I'll just quickly come to the levels because there's not very much else sort of noteworthy with regards to global markets. So yesterday, both the Nifty and the Nifty Bank had a decent move, and we've managed to close above the 40-hourly exponential moving average. Nigel will talk more about this, but I looked at the positioning data, which is nothing but FIIs in index futures. Short positions have not meaningfully moved. I think there were about 1.82 lakh contracts short as of Friday's close. That number has moved a little bit to about 1.78 or so. But there's other stuff there which we will address. So there is, FIs are still heavily short. That's the point. And there is room as you go into that Friday event, perhaps for a little bit more covering. Hopefully, that was what I sort of thought yesterday morning. I didn't expect it'll be, a big move yesterday itself. I thought over the next couple of days, because Friday is a market holiday, you get a bit of a lift. Nifty resistance on the way up now, 24,634. And then the 24,847 mark, which is nothing but the 20-day moving average, which is the 24,847 level. Support for the Nifty comes in at the low, which is 24,337. For the Nifty Bank, it needs to close above the high of 55,652, which is nothing like but the Nifty at the recent high. And then the 20-day moving average comes into view if we get past that, which is 56,213. So, that's the overall broad setup that we're working with. GIFT Nifty, I don't think, has got very much by way of a cue, an indication, inclination. It's done about 27, 30 odd points lower with regards to the indicative open that it is telling us. Survey.
Yeah, absolutely. Actually, cues are thin, global as well as local. So not starting with too much of heavy news flow, which could be actually a good thing for the market. If you're looking at the Asian region, obviously markets are reacting to the fact that China has indeed scored this 90-day extension. It was widely expected. So therefore, you're not seeing any dramatic moves. Minor gains on the Hong Kong Hang Seng. Actually, it's very flat now, not even 1 point higher. The mainland Chinese market is doing better. Shanghai Composite is up about 0.5%. Taiwan is seeing some gains for the time being. The big rally this morning in Asia is in the Nikkei, the Japanese market, 2% higher. Japanese stocks are ripping ahead, led by names like SoftBank. SoftBank has been on a 5-day tear, and that is continuing. Then, a bunch of other stocks, Mitsui, etc. All of them are looking very, very good. The Australian market also hit a record high today. It's anticipating a rate cut from the Reserve Bank of Australia, so rate action in focus over there. So generally speaking, Asia is looking quite okay, which is not what the implied open is suggesting for us. So let's see what actually happens. Yesterday, the bulls finally got a reprieve, a breather after many sessions with a rebound from largely oversold levels. Now, can the Nifty build on to an advance above 24,500? We'll see. The flows picture. Domestic institutions, as usual, on the buying side, almost 6,000 crores of buying came in. Obviously, there was, large blocks as well that skew the data. But net 6,000 crores of buying from the local institutional side. FPIs, again, after being buyers on Friday, Monday, yesterday, again, they were on the sell side. Sold off cash equities of worth almost 1,200 crores. As I said, not too much of local news flow. We'll talk about, of course, the ending earnings. And many of them are, still lackluster. Bata, for instance, just an example. Soft. Once again, the top line has been weak, but there is some margin expansion year on year, so we'll see how the market reads into it. Tilaknagar continues to be a very solid set. Clearly, no consumption issues over here. 30% kind of growth, and the stock's done well. That acquisition has been the big talking point as well. So watch out for some of these names. And aside of earnings, Indian Hotels has announced, a small acquisition, buying 51% stake in A&K Hotels for 110 crores and 94 crores for a stake in Pride Hospitality. Now, these are companies that run the Clark's group of hotels and resorts. So we'll see. Largely, the stock has done really well, and the market is positive on hospitality as a space in any case. So this remains a watch point as well. But Nigel, you tell us, what are you tracking?
Well, the Nifty yesterday, as we had hinted, that it bounced from oversold levels. Whether you looked at the PCR, you looked at the shorts, you looked at the RSI as well. That was calling for a bit of a bounce, and that's precisely what happened in yesterday's trading session. Follow through, though, is going to be extremely important. Remember, last week as well, we had a bit of a bounce, but we didn't see follow through. Now, this time around, let's see whether or not the bulls actually can drive home the advantage, because we've got a shortened week and you have big global cues as well that are lined up. Now, moving to for the markets on the whole, yes, there was a bit of a short covering bounce. The Nifty bank ended higher. And for the market on the whole, there was some covering because the open interest was lower. But you look at the FIs, well, very mild short covering is what we saw. If the markets can get a hold of themselves, if we can get some kind of positive news flow, imagine if we see a bigger short covering bounce, because yesterday it was only around 2,800 contracts that were covered on the short side, while even on stock futures, well, there was some long addition and there was very mild short covering. The short point is yesterday's bounce was not entirely short covering, because the FI shorts, they're pretty much still holding onto their ground. And as you see in percentage terms as well, it's around 91.5%, which is at a very elevated level. In absolute terms, the clients as well as the FIs, they have been on opposite ends, and that continues to be the case. 1.2 lakh contracts on the long side for clients, while FIs, they are short at around 1.8 lakh contracts. Moving to the PCR, we had highlighted this yesterday. At around 0.65 odd, you do see a bit of a bounce. That happened. But now the PCR has moved back towards the midpoint, which is at around 1. That's because yesterday's trading session, you had two strikes that were very active. 24,500 put, 24,400 put. Between them, they added close to around a crore shares, with the premium as well coming down. So these put writers, they feel they're back in the game. Which brings us to the levels that we're looking at. On the downside, the 24,350 mark, that's extremely important support. I'll tell you in further detail in just a bit. Resistance comes in. First level of resistance, 24,750, and then all eyes are on the 20 DMA. But the reason I say that 24,350 level is extremely important on the downside, because the last few trading sessions, the lows of the day are in that vicinity itself. So that's the important mark. You don't want these levels to get violated on the downside. One other positive in yesterday's trading session was after many trading sessions, the Nifty made a higher high, very mildly so, but that was good because for 7 straight sessions, we had lower highs that were being made. Which brings us to the Nifty Bank. You know, yesterday it did bounce off that 55,000 odd mark. It saw a bit of a bounce, but now we have the 20 and the 50 DMA. That's the resistance mark, which is close to around 600 points away from current levels. So you'll want the Nifty Bank to gradually move towards that level. And since Donald Trump has given a bit of an extension to China, well, I'll keep an eye out on the metal stocks because normally it has a bit of a positive rub-off since he's extended that for close to around 90 days. So short point being, yesterday was a good trading session from extremely oversold levels. You want to see some follow-through level. You want to see the Nifty go ahead and conquer the 24,750 odd mark.
All right, Nigel, thanks very much for that. So that's the setup as things stand right now.